Thanks for sharing that, Suresh. What else? What is an asset? It is wealth, okay? Asset is something which grows in value over time. Thanks for sharing that. So asset appreciates. That's a very interesting perspective. Asset is something which is of value, which appreciates, which denotes wealth. There are different dimensions to assets. One of the basic things I would like to talk about is that asset is something that you own. And there are two broad categories of assets. One is physical asset and the second is financial asset. Physical assets are those which we can touch and see, like our house. It could be a land, it is gold. And the financial assets are those which are in a form where we can't see them, like shares. They are in a demat form, so you can't see it, you can't touch it. Mutual funds are all electronic these days. Fixed deposits also are electronic. Insurance policies also are going to get electronic very, very soon. So financial assets are those which can't be touched and felt. Physical assets are those which can be touched and felt. These are two broad classifications, and it is important for us to understand, where should our money go? Whether it should be all in physical assets or all in financial assets, or should it be a judicious mix of both physical assets and financial assets? Most of the times, people invest in the assets basis their comfort. So I have known families and friends who invest only in land, because land historically has given them. Can you please put yourself on mute and speak only when it's in the question answer session? So some people only invest in land, some people only invest in houses, some families invest in gold, some are only in shares, some only in FDs. So we go by our comfort, not by what asset is the returns that assets will give. Typically in the last 10 odd years, and overall also if we look at the history, for last 30-40 years, it is the financial assets which have outperformed the physical assets. And this is the RBI data which I am sharing with you. So the financial assets give you higher returns and are liquid. The physical assets give you lower returns and are illiquid. Let us understand what liquid and illiquid means. Liquid is I can convert my asset into cash very, very quickly. And physical assets, whether it is house or land, it cannot be immediately converted into cash. So I have a house which I was planning to sell for over a year or so, but because of one reason or the other, it could not be sold, and then I had to put it out on rent again. So these are the challenges which we need to keep in mind, that if I'm investing in an asset, whether it will give me cash when I need it or not, what is the purpose of my investing in that asset? Those are some of the things that we are going to discuss as we go further along. Other thing that we need to understand is what is liability. What comes to your mind when you hear the word liability? It is okay if you can just share what is commonly understood. Manas says it's an expense, Rohit says it's an EMI. Okay, that's an overhead. Okay, interesting. Akash sir says what you owe. Liability is something that we owe to people in forms, and the repayment happens in forms of interest and EMI, whether it is education loan, credit card loan, car loan, personal loan, home loan, loan against shares, or loan against property. There are different types of loans, and each one is taken for a different purpose and has a different rate of interest. So some loans, like credit card loans, are unsecured loans. There is no security you give, and they are one of the highest interest loans. House loan, because it is secured, the house that you buy is the security against the loan. It is one of the lowest interest loans. Loan against shares also is lowest interest. There is one more thing I would like you to understand here. What is the purpose of our taking a loan? We can take a loan to finance our consumption, which is what I see many people doing these days. They spend money recklessly in buying clothes or buying food or drinks or just to have their lifestyle. And then there is loan that you can take to invest in an asset which appreciates. So it could be an education loan, or it could be a home loan, or you may take a loan to invest in shares. That is what some people do. They borrow money and then they invest in shares. But that's a very risky proposition to take, because the stock market is fluctuating in value. So there is a lot of work which my friend Avdesh has done in the area of, managing debt. And what happens is, once we start taking the loan for consumption, we tend to get into a debt trap, because that expense that we have made is not going to add any value to us. And we are not in a position. Government of India, the one difference between Government of India and us is that government can print money to pay for loans, but we have to pay the loans from our earning. And if we are spending more than what we are earning, we get into something which is called a debt trap. In the times of my father, life was simpler. If he would earn 100 rupees, he would spend only 80 or 90, because there was no way to spend more than 100 unless you have saved it and kept it. Today, because of easy availability of credit cards, the income and spending has been delinked. One could be earning 100 rupees, but could be spending 120, 150 or 200 rupees. And as I do these sessions in different corporates, one of the corporates I found that one gentleman had 6 credit cards. It is very easy to imagine why somebody would have had 6 credit cards, because you take one, the limit gets over, you continue with that disastrous lifestyle of spending more than you want, and then you take the second one and the third one and fourth one, and then people get into a debt trap. So at this stage, I would like to invite Avdesh to come in and share his experience about how he is helping the clients in managing their debt. And I'm also going to share with you an Excel worksheet which you can use quickly, to tabulate your loans that you have got. To quickly, don't worry about accuracy. Accuracy can come in later. These are worksheets that you can download and keep with you. So tabulate all the loans that you have got, the interest you are paying, and the assets that you have got. So I invite Avdesh to come and talk about how he's helping his clients manage debt. And also I am putting up the worksheet which you can download and start tabulating your assets and liabilities. Over to you, Avdesh.
Thanks, Ashish. Thanks for the insight. Friends, there are a few basic things which we can do in debt management. And as a financial advisor, my job is not only to advise in the investment side, but also to take care of the debt side of my client. That they should not be over borrowing, and there should be if there's a borrowing, it should be very manageable, and it should be inexpensive borrowing. So I'll just tell you two incidents which has happened. So one, I had this actual incident. I had this client of mine, young professional, mid 30s, having a small family. He had a small car, and his parents had moved in with him from his native place. So he needed a bigger car for the family. So I was discussing with him, and he told me, Abdesh, I need a bigger car, which is going to cost me around 10, 11 lakh rupees. However, I can't afford it right now because my salary doesn't permit it. I really can't pay that much of EMI. And this was a need for him, So I don't sort of encourage him to spurge the money or go in for a luxury when you don't have enough money. But this was needed by him. So I told him, see, the car loan is going to be a little outrageous for you. You have a house. Being a client, I had his details with me. So he had a house which was market value was around 70 lakhs, and he had a loan of around 30 lakhs on the house. So I advised him to take a 10 lakh rupees house loan rather than taking a car loan. So what happens with the house loan? This EMI is spread over 20 years. So EMI of house loan will come to 8-9,000 rupees for a 10 lakh rupees. EMI of car loan is going to be around 25,000 rupees. So the cash flow was manageable. But I took a commitment from him that he's not going to splurge. So next time he gets a raise of, he gets a better job where his cash flow is better, he's going to invest that money. He's not going to buy another car after 2 years, 3 years down the line, which he agreed to. And every year after that, he has been increasing his investment with me. So most important that I had to advise him how to manage his debt that point of time. He could buy the car, he could still manage his debt, cost of debt was lower, and the cash flow was better. That is one. And there's another example which I can tell you. Some of you may know that over last few years, there has been change in the home loan, how the home loans are being priced. So earlier, home loans were priced based on the base rate. So 4-5 years back, I'm talking about. If somebody took the home loan, you'll know about the sanction letter. You see, there's a base rate plus markup which bank will have. And thereafter, it changed to MCLR, which is marginal cost of lending rate, which was a different formula of calculating, which was calculated based on the incremental cost in bank. We are not going to those kind of technicalities, but there was a change of the regime in favor of customer. So there was a better pricing which was available to the customer. And now, last 1 year back, around 1.5 years back, RBI stepped in. RBI said, all this you will not calculate the cost. RBI has asked banks to link the rates based on the RBI repo rate. Okay, so that's a rate which is given by RBI. The bank will charge a markup. So typically, you will have, if you take a loan today, you will take a loan at repo rate plus some 3% or 3.5%, that kind of thing. This is an external benchmarking. So with each shift in the regime, the pricing for the client is coming down. But if you are an old customer of the bank will not come and tell you that the regime has changed. So bank will continue charging you interest based on the previous regime of base rate or MCLR unless you go and tell the bank. So I had to tell all my clients, I told all my clients, anybody having a home loan, please go and link it to RBI repo rate. You won't believe the saving for few of the people have been 4 to 5 lakhs in EMI. They've saved over the tenure of loan. Or probably the tenure has come down by 1 to 1.5 years. A quarter percent or 0.5% kind of saving in the interest rate on a long-term loan like home loan will make you save that much of money. So very important that you have better credit management. You understand how to do how to borrow as well. Over to you, Ashish.
Okay, thank you, Avdesh, for sharing those insights. And friends, Avdesh has shared a clip link to a video where he is advised on debt management. So please download that and like and subscribe Money Logic's YouTube channel, where you can stay in touch with all the topics related to finance on an ongoing basis. So moving on, what we have covered so far is the concept of asset and asset allocation. Asset allocation is extremely important for generating returns. There was a proverb earlier which used to say that don't put all your eggs in one basket, and that is worth $1 million. Don't only be invested in physical assets, don't only be invested in financial assets. Have a proper bifurcation of how much money should go in financial, how much should go in physical assets, and take advice of a financial advisor, not an investment advisor. Most of the times we are talking to an investment advisor who is just peddling his product to you. So you will have an insurance agent just selling insurance to you. You will have a mutual fund agent selling mutual fund to you. You will have a real estate agent selling real estate to you. But it is better to engage with a financial advisor who can holistically look at your financial situation and advise how much financial assets you should have, how much physical assets you should have, how much gold you should have. There is a certain percentage of gold you should have in your portfolio, certain amount of FD, certain amount of shares, insurance, all of that. how much should each one person have? That is very important to consult a financial advisor and come. And this asset allocation is very, very important because the different asset classes have returns which are almost inversely correlated. So you may find some point of time financial assets are giving you superior returns. Some point of time you will find physical assets giving you superior returns. So it is very important to have a proper mix to generate optimal return for your portfolio. So asset allocation is one of the very important things when it comes to understanding assets. I hope you have downloaded the participant workbook. If you have downloaded the participant workbook, please type yes. So that we know you have downloaded, and some of these notes you can make in your participant notebook, which will be with you for reference. Thanks for confirming, Ritu, Akash sir, Gurmeet. Let's see a few more people. Manas, Manoj. Manoj, you can go up and see in the link. Rohit, Rajan. Okay. Thank you. I think fair bit of people have downloaded it. In case you have a challenge, then maybe I can take a minute and upload it. This way, you can use the workbook to take your notes and refer to them whenever you need. So I have uploaded it here. So asset allocation is one very important concept which we need to understand as far as assets go. Second is assets should be more or liability should be more. What should be more? If I were to come and tell you that I have got 1,000 crores of assets, what will be the impression you will have of me? So we meet in the evening over a coffee and I tell you, my friend, I have got 1,000 crores. What will be your first reaction? Super rich guy, very good. Let us see if there is some other view or some other response we get. I have got 1,000 crores. What will be your reaction? Sorted in life. But what I didn't tell you is I have got 2,000 crores of loans. So I have taken 2,000 crores of loans. I have spent 1,000 crores and I have got assets of 1,000 crores. Now what do you think? Vijay Malaya, exactly, foolish. So it is very important for us to understand, friends, that it is assets should be more than liabilities. We happily, because the banks, it's a very profitable business for banks. They will keep giving you loans and, we keep taking loans and banks' profit goes up, but our, profit comes down. So it is very important that we should build assets and which generate cash, and our assets should be more than liability. And the difference between asset and liability is called net worth. And that is a very important concept. We will talk a little bit more about it later, but please understand the concept of net worth is very, very important. And what net worth means is asset minus liability. So if I have got 1,000 crores of assets and I have got 500 crores of liability, what will be my net worth? Can you please type in the chat box? I have got a 1,000 crore asset and 500 crore liability. What will be my net worth? 500 crores. Goel Saab is bang on. Let's see if there are any other responses. What is my net worth? I have got 1,000 crores assets. If you agree with Goel Saab, you can just type, agree. Or if you have a different number, my net worth is 1,000 crores, 500 crores. What is my 500? Raman also agrees it is 500 crores. Bang on. So the net worth is asset minus liability. And we talked about good debt and bad debt. So any debt which you are taking just to finance your consumption, which does not add any value to your life, is a bad debt and will get you into debt traps. So be very, very careful about using debt to finance your expenses, my friends. And how many of you would like to learn the secret formula of how rich keep getting richer? Have you heard that rich keep getting richer? If you have heard rich keep getting richer, please type yes. And if you would like to learn the secret of how rich keep getting richer, please write yes, yes. पैसा कहाँ खर्चना है? Yes, yes. Okay, so you have heard and you would like to know. So it is simple, but sometimes when things are simple, we think this will not work. But the fact is, simple things work. So the how rich keep getting richer is a very simple formula. Rich constantly are building cash generating assets. If you are focused on building cash generating assets, you will keep getting richer. But if you are taking more and more loans, to finance your consumption, you will either stay where you are or you will go worse. The chances are you will be worse off. So the second part to this is rich keep getting richer and poor keep getting poorer, because the rich are constantly building cash generating assets and the poor are always taking loans to finance consumption. So that is the secret between, the secret and difference between how rich keep getting richer. So friends, we will pause here for a minute to capture what have been your, takeaways from the session so far. So, we will use this slide. You can either use annotate button to share what have been your takeaways or what is it that appealed to you, or you can go into the chat box and type what is one, two, or three things that you liked. Yes, Goel Saab has said very rightly, if we don't manage our money well, if we don't understand that rich can become poor, there is a story which, not story, it is happening, there's a big business family, the business assets were divided amongst two brothers. One brother is in the top 10 richest in the world, other brother is almost bankrupt. So if you don't manage your money, whether it is 100 crores, 1000 crores, 10,000 crores, you can go bankrupt. Thanks for bringing out that point, Goel Sahab. We'll be happy to hear from you if there have been any takeaways or if there are any questions also. We can maybe take 2-3 questions. If there's something which is not clear or you would like to clarify, whether it is your question or your friend's question, please share your takeaways so far. We have discussed one or two things that you have invest in different plans, not only in one thing. Okay, asset allocation, you do not have much control. Yeah, so Shibashis has made a very good point. You don't have much control on earnings, but how to spend is within our control. So how to spend and how to invest is within our control. So that is what is in our control. We should be, very particular about. Rohit has made a wonderful point, which is it is not the income. Prior to starting Mindful Living, I worked in corporate sector for 25 years in very senior roles. And I've had hundreds and thousands of people reporting into me. And, most of the salaried people are worried about the income. How can my income grow up? Can I get 5% increment, 10% increment? But the rich people, they more than income, they're focused on their wealth. They're focused, how can I grow my assets? Because they understand the game is growing cash generating assets, not in, and if you grow your cash generating assets, your income will grow up automatically. But the working class or the poor class, that's what the rich dad, poor dad says. The working class or the poor class is focused on increasing income. The rich class, the rich dad is focused on building cash generating assets. So, and if you look at the rankings of the richest people in the world, what are they ranked by? Who's the richest person in the world? Who's the richest or the, you don't have to worry about getting things right. Whatever name comes to your mind, you can type. And you don't have to worry about getting his exact net worth right. Bill Gates, Goel Saab says, is the richest person. Very nicely said. Who else you think is the richest person? And how many, why do we say he's the richest person? Why do we say Bill Gates or Warren Buffett are the richest person? Jeff Bezos, Jeff Bezos is the richest person. Bill Gates is the richest person. Warren Buffett is the third richest person. On what their worth, we say they are the richest person not by their income but by their net worth. So this is the difference we need to understand, friends, that the richest in the world are focused on their net worth, and they are also ranked on their net worth, not on their income. There is no list, which gets talked about of who earns the most. There may be, sometimes some list of film stars or sports person who earns richest, but for business people, it is always the net worth which is considered the richest thing. So that is what is, that's a very good point, Rohit, you made. So the rich are focused on building cash generating assets and on the net worth. Next, we move on to the understanding the basics of income and expense. Income is what we earn, and there are different forms of income. We get income by way of salary, by way of profit from business, by dividends, interest, rent, or if somebody is a professional, you may get fees, professional services, salary or professional fees. These are the different sources of income. And we spend money on, different items, rent for office, home, we pay salary to our staff, we pay EMIs, credit card bills, and we spend money on necessities, education, etc. Couple of things which we need to understand. A person could have one source of income, or a person could have multiple sources of income. What is better? Having one source of income or MSI, which is multiple source of income? If you think it is better to have multiple sources of income, please type MSI. Rohit says MSI, Ruchi says MSI. So all of you agree it is multiple source of income, but most people are focused on one source of income, which is either their salary or their dominant source of income if you're a professional on that. We don't pay much attention to building multiple sources of income, and it is not that it can't be done. Keeping your main job or keeping your main profession in place systematically with the consultation of a financial advisor, you can start building passive income streams. So what I would like to share with you are there are two types of income streams. One is active, which is an income. Active income is an income which comes because I'm working towards it. So if I don't go to work, I'll not get the income for that day. And passive income is an income which comes irrespective of the fact whether I go to work or not. So dividends on the shares is a active income or passive income. If you think it is passive, please type P. If you think it is active, please type A. Goel Saab says dividend is passive income. Salary is active or passive? Type A, active. Salary is active. Profits from business can be active. Dividends are passive. Interest is passive or active? Passive. Rent is passive or active? Passive. So there are two things we need, 2 points you've discussed so far. One is the importance of having multiple sources of income, and second is having active income and passive income. And we need to understand that our financial security is linked to having higher passive income. So over a period of time, if we build up our passive income, we'll be more financial secure and prosperous. How to do that is something which we are going to see in the next section. The next point about expenses is, what should be, I made a point earlier about, how in my father's time, because there were no credit cards, there was a proverb, there was a saying कि जितनी चादर है उतना ही पैर फैलाओ. तो जितना इनकम होती थी उतना ही खर्चा करते थे, but अभी वो डीलिंक हो गया है, and that is why we just keep spending. We think credit card is my money. Credit card is not your money, it is borrowed money. So please use credit card very judiciously. Plan for your expenses. There is a survey done which says that 7 out of 10 couples don't plan their monthly expenses. In the Excel template that I have shared with you, you can open it and see that there is how you can use that to capture all your monthly expenses. You can capture what is your anticipated income. Somebody made a point that my income is not regular. So if your income is not regular, you need to be tabulating your expenses very, very carefully and seeing how can we control our expenses and how can we balance it out. So please use that template. It's a very simple but very powerful template. Use that for your budgeting. The next very important point I'm going to share with you is about return. So we have all heard ROI, which is return on investment. Have you heard a concept called ROS? ROS is, so most of the times, when we go for, when there is any discussion about investment, people talk, I need to go for the highest return investment, highest ROI chahiye. ऐसे ही बोलते हैं सब. But what we need to understand, equally powerful concept, which is rate of saving. How much are we saving out of our income is extremely important. And I'll give you an example. There is, and this is a hypothetical example, don't take it literally. There is a person who earns 30,000 rupees, but saves 10,000 rupees. There is a person who earns 1 lakh rupees and has got a lavish lifestyle, and he saves only 10,000 rupees. Whose financial future will be better, or will their financial future be the same? Yeah. So whether, this is just to bring the point that irrespective of your level of income, if you can focus, you can control your expenses and you can save, focus on saving your money and investing it, you can have a very strong, solid financial future. Most of the times we get constrained by thinking that my income is not enough, but what we should be focused on is what is my saving, and whether I'm channeling my saving into assets which will generate cash for me or not. So that is rate of saving. And the last point, which is income or wealth, we have discussed earlier. So these are the points which we wanted to share with you on income and expense. We will pause here for a couple of seconds or minutes to take your questions, comments. What will be an ideal ROS? Manas, I'll request you to hold this question till the time, for the section when Avdesh comes, and he will be talking about it. Thanks for asking that question, Manas. And we'll be happy to take any, you could share your takeaways. You can use the annotate and text option to write and share what is your 1 or 2 takeaways, or you can share in the chat box what has been your takeaway. Or if you have a question like Manas has, you can either type in the chat box or you can unmute and speak yourself. Importance of having Rohit very well said. I could not get the Excel sheet. I'll just upload this here once again.
Actually, a lot of people are asking for Excel and that word sheet. I think you can upload.
Okay, I'll upload the Excel again. So here is the Excel, and here is the participant workbook. Goel sir, we will take these questions towards the end. Thank you for asking that question. Navneet, I hope you have got the Excel sheet now. So one of the takeaways is the passive income should be higher. Any other takeaway? So Navneet, we have we will email it to you. We have noted your email. So if you have got your worksheet, there is a question that are your expenses more or less than your income? Uh, if your expenses are less than your income, it's good. But in case your expenses are more than your income, please write down for yourself. You don't have to share it with anyone. This is for your own. Write down top 3 reasons why your expenses are more than your income. And when you use that Excel sheet, that will also give you an idea, how to track your expenses.
I should move ahead, I suggest.
Avdesh, would you like to take this question from Akash Mishra, sir?
What is the question?
Cash is the house that one stays in a cash generating asset. What the house in which a person stays, whether it is a cash generating asset.
Okay. So, sir, if you're using a house, if you're staying in a house, it's definitely not a cash generating asset because you don't get any income out of it. When we say cash generating assets, are the assets which throw you some cash flow. It pays you back on a regular basis, a certain frequency. So, other example of non-cash generating assets can be a house property which is under construction, or maybe some land which is under litigation. Which is actually not generating any cash. In fact, sucking cash from you because you might have to spend something on litigation, maybe maintenance or something like that. There can be certain other assets, like financial assets, also which have gone bad, like bad debts. Recently we heard this of Yes Bank perpetual bond being defaulted from a bank, and Yes Bank went down, and then RBI had to come to its rescue. Some people had perpetual bond on Yes Bank, and they are not being paid. They are still under, there is a negotiation going on between the bondholders and the RBI that what will be paid out of that. Definitely, there will be something will be paid, but as of now, that money is stuck. So there is another. You can call it an asset because you spend money on that, but it's stuck in between. It's not yielding any cash flow. Neither you can cash that asset.
Thanks for asking that question, Akash sir. Those are very valid questions. And you've also Akash sir has made a very valid point that gold is also a non-cash generating asset. Yes, gold is a non-cash generating asset, but it is important. See, if an asset is not generating cash, does not mean you should not have it in your portfolio. You should still have it in your portfolio. And like I was saying earlier, most of these asset classes are inversely correlated to each other. So typically in times of uncertainty, you will find that the gold performs very well. So certain percentage of your portfolio should be invested in gold, and like that, you should have a house also, because you can't have you can't have all the FDs printed and you can't live in them, or you can't live in a house which is made up of share certificates. So that doesn't help. You need to have that house. So there is a purpose of having each asset class, and we are not saying that this is good or this is bad. What we are trying to say is be aware of what is the advantage of each asset class. घर का क्या एडवांटेज है, शेयर्स का क्या एडवांटेज है, एफडी का क्या एडवांटेज है, और आंख खोल के फाइनेंशियल एडवाइजर से अपना फाइनेंशियल ऑब्जेक्टिव डिस्कस करिए, और वो फाइनेंशियल ऑब्जेक्टिव के हिसाब से, फाइनेंशियल गोल के हिसाब से आप इन्वेस्ट करिए. दैट इज ऑल वी आर ट्राइंग टू से. वी आर नॉट सेलिंग एनीथिंग टू यू हियर. वी आर नॉट सेलिंग absolutely in this program. There is no selling that is going to happen till the end of the programs. Okay, this is just our learning, because we are both so passionate about financial peace and financial literacy. This session is just an outcome of that mission that Avdesh and I are on in spreading financial peace and literacy.
Ashish, just to add here, gold has a lot of element of liquidity. So that's another aspect of holding any assets, how liquid it is, how fast you can encash it. Gold is one of that asset which can be encashed with.
Yeah.
Let's go.
Thanks for adding that.
Yeah.
So, friends, we have discussed two basic, but powerful concepts of asset and liability and income expense. Now, I'm going to share with you another perspective of financial planning, uh, which is very, very powerful, and there are very few people, I have seen in my life who talk about this, which is the concept of pyramids, uh, or let me ask you a question. Which is the most stable structure in the earth, on the planet Earth? What is considered to be the most stable structure? Pyramids. Now, the pyramids have been around for 5,000 years, so they are considered to be the most stable structure. And when we plan our finances, if we use the concept which was used for making pyramids, then our financial structure can also be very solid and it will stand the test of time. So in this financial structure, if you are interested in knowing how to build this financial structure for yourself, please type BIO, bring it on, in the chat box. Okay, Oma, Goel sir wants to know, Manas wants to know. I need to see some more BIOs, otherwise we will. Okay, Anil, Rohit, Navneet, Ruchi. Okay, good. So, friends, the base of the financial pyramid is the most important one, and that is insurance. Covering your life, covering your health, disability insurance, cyber insurance. Please set aside 1, 2, 3, 4%, whatever is right for you, to buy the insurance. And in times like this, which are so uncertain, it is very important that you have adequate life insurance and health insurance. That's the basic minimum. And once you have covered this, I'll not go too much into details in this now because we are kind of running behind time. But this is, please take it that if you don't have your life insurance and health insurance, your structure can crumble. I have had very close family friends, who got detected with cancer, and the stage came where the person was saying, if I need to sell my house, I'll sell my house, but I'll take care of my relative whose treatment money is required. So if you don't have insurance, it can bring it can lead to liquidation of all the assets. So we all rush into building assets, but what is more important is first we cover our life and health. And once we have covered our life and health, the next most important thing to do, which very few financial planners will tell you, is to make an emergency fund. And that emergency fund should be 3 months, 6 months, or 12 months of your annual expenses. It depends on different factors, whether you are the single earner or there are multiple earners in the family. But 3, 6, or 12 months of expenses are very important. And once you have built this, it's a very powerful thing which will help you deal with any emergency. And the beauty of this is, once you have an emergency fund, the emergency does not come, because you are so confident, and you have that confidence that come what may, I am protected, I am secure. You go out and give your best to the life, you go out and give the best to your work. So an emergency fund is the next thing. And last is the financial goal. The topmost, I shouldn't say last, but the topmost is the investment goals, where you identify your goals, whether it is your children's education, whether it is your retirement fund, identify your goal, identify the right vehicle for that goal, and then you plan it. So if you have to go from Gurgaon to Delhi, maybe you will go by car, but if you have to go from Bombay to Delhi, then you will go by plane. So what is the goal? The vehicle will be decided basis that. And with that, I would like to invite Abdesh to talk about the financial goals and how, some important financial concepts which can help you become a millionaire.
Thank you, Ashish. I'll just start sharing my screen. Uh, Uh, if you talk about financial pyramid, okay, so right, so investor, if you want to create a wealth, most important that you should have your destination in sight. In a sense, you need to know the goal. That's the most important thing. So as this proverb says that investor without investment objective is like a traveler without a destination. So there has to be a definite quantifiable goal in sight. For example, like say you have a child who is 5 year old and you want to send him for higher education when he's 17 or 18 when he does his class 12th. So you know exactly you have 12 years and you need to know the amount which you will have to spend that point of time to sponsor for the education. So this is a definite and quantifiable kind of. These are can be pure financial goals. Your retirement, your financial freedom, your child education, buying home. All this can be financial. It can be different from different people, but these are the kind of financial goals for which we work and which we should have sight always in our mind. No, but what happens? We talk about the goals, but when we buy a financial product, do we actually think of a goal? I hardly come across people who will actually think of a goal at the time of buying a financial product. So typically, how do we buy a financial product? These days, your bank relationship manager will sometime call you. He knows that they typically have access to your bank account, so they would know exactly how much money is lying in your bank account. They'll typically call you and say, "Sir, ये अच्छा product आया है, इसमें लगा दीजिए पैसे." अच्छा product आया है. And sometimes if you have money surplus, you put in that particular product. If you do not have, you ignore the call, you don't put up the product. Lot of people, lot of people put money for tax saving at the 11th hour in the month of March without realizing whether it's actually fulfilling your financial goal or not. You are living for your financial goal, not for your tax saving. So first your financial goal needs to be met and then you look at the tax saving. Tax saving should also happen. I'm not saying tax saving does not need to happen. But tax saving can also happen with your financial goal being met with the same money which you have. Sometimes what happens is relative, friend, somebody, especially at the time of childbirth, there's a lot of, if you have a young child or there's a childbirth at home, there's a lot of emotional blackmailing which happens. So somebody known to you will come and approach, says, "बच्चे के लिए आप ये कर दीजिए." And you don't even know whether it is relevant to your child future or not. No, you should invest. We have to invest for our child. We have to take care of them, our children. But the product are bought more for emotional reason, not rationally thinking that this has to meet the goal for which I'm saving, for which I'm working. I'm sure all of us, a lot of us must have experienced. Have you experienced this kind of thing? Can I know from you people? Yes or no? Well, so yeah, so this is the experience all of us have gone through, and we still go through. I mean, you keep getting calls from those people, from your banker or from somebody asking you to buy a product, telling you how fantastic this product is. They will never tell you. They will never ask you how important your goals are. What are the goals which you have to meet? Uh, so how do you decide when you have to buy a mobile phone? All of us have bought mobile phones, some electronic gadget or something. We spend so much of time in buying a mobile phone. We compare a couple of products. We look at the features. I'm not tech expert, but there are pixels which we have to look at. There are we look at the features. We look at the memory of devices. I know those things which we do. Now we spend so much of time, and we actually don't spend this much of time in selecting a financial product or actually spending this goal setting or buying the right kind of product for ourselves. Right. So when we are doing investment or we're doing a financial planning, time is essence. So the more time you have, the better you can plan, and more comfortably you can reach it your goal. This is a very simple example. A gentleman starting investing at the age of 25 and somebody starting at the age of 30. and they are doing the same amount of investment every month. They are saving 5,000 rupees only. What the difference? This is the power of compounding, which we call the eighth wonder of the world. This is called power of compounding. So compounding can have such a big impact on your financial futures. So if somebody is at the age of 25, he's saving 5,000 rupees per month, and his return is 13. When he's 55, which is 30 years down the line, his net worth is going to be 2 crore 21 lakhs. But at the same time, the other gentleman who starts just 5 years later, if he starts 5 years later, then he's going to be almost half of it. So a small saving 5 years in advance, early you start, the better off you will be. I just throw a little light on mutual funds. When you talk about mutual funds, it's not about all equity funds. No, we all whenever we talk about mutual funds, we're always thinking about equity funds. Mutual fund is not all about equity. Uh, the debt mutual fund, the debt market, is actually twice of our equity market. But it's an institutional market. So a lot of retail people and people like us don't know about the debt market. But debt market is so huge and it has answered to so many of your fixed income needs. You have such a good alternative of FD or even the saving bank deposit, and even for your long-term kind of investment. A lot of options are available. You need to discuss with the right kind of financial planner. So it's not mutual fund. It's not uh, only about equity. There are mutual funds which are debt. There are mutual funds which have gold. There are mutual funds which have multiple assets apart from debt equity, also commodity or some other kind of assets. So this is the way your investment works. We've taken an example of say, but any kind of investment, we know this story. I'm not going to talk about this. So there's a concept of latte factor. This latte is for the coffee, not in Hindi. A latte factor basically means what we can gain by sacrificing a couple of coffees. So we, when nowadays we are in house, but when we are going to the offices and outside, we never bothered about consuming a coffee. Or a coffee or two in a day outside, and maybe 100 rupees or 200 rupees doesn't matter. So what this tells us that if you can just make that little a sacrifice for which you think it's immaterial to you, sacrifice of 100 rupees per day, which is something like you can save just 1,000 rupees by doing that in uh, in a in a month. To invest that money, which you can save by sacrificing coffee, if you save 2,000 rupees on top of it, you can look at. We will be saving something like we'll be making it 30 lakh rupees over a period of 40 months or 20 years. So if you do it for if you save something like $4 a day, which is around 300 rupees a day, you can actually be a dollar millionaire in 40 years time. That will be around 7 crore what you can make out of that. So that's a latte factor. This is a very insignificant amount which we don't think of, but if we put to a good use, it can reap a great benefit for us. So this is my favorite. A lot of people know this gentleman. Warren Buffett is always my favorite. He's an investment guru, the best investor we know. So it is actually happened. Somebody asked him in an interview, well, is it so difficult to get rich? Because Warren Buffett is so rich. He says, no, it's very easy, but you have to get rich slowly, and nobody wants to wait for that time. So if you have planned and you are slow and you want to accumulate the wealth in long run, it's very easy to get rich. Actually, it's not very difficult. These are basic. If you save 3,000 rupees a month in 20 years, this becomes close to 40 lakh rupees. This just shows us the benefit of giving time to investment, what it can do to us. If we save for 30 years, this becomes 1.7 crore approximately in Indian rupees. And if we save 300,000 rupees for 40 years, it becomes almost $1 million, which we are talking about in the latte factor, around 6.91 crores. So I know financial planning is sometimes boring. You can't get rich if it's not a lot of excitement. It's more of discipline and behavior, which is important. We have to look at safety first. That's the most important thing, which is Ashish talked about, that we have to cover all emergencies, risks, those things. Liquidity second, that we need to have emergency money available with us, and there should be encashable as, and then we look at the long-term return and long-term. This is the history of Indian financial market. We have shown from 89 to 18, almost 30 years. Recently, it fell and again has currently market is above that at last year. So there are many events which have happened. We saw Harshad Mehta even 92. Some people might remember that point of time. But recently, we will remember Lehman Brothers crisis, which 2008 has happened, and then we had also COVID, which was another big fall in the market. Market has come up from all of this. We temporarily think that this is the end of the day, and I don't know what will happen with my money. But even if you started at peak in 2008, you started your investment, which is the worst time probably to start investment. You probably still very rich if you are disciplined at that point of time. And you've taken 12 years to build a wealth. You would have built a wealth. So very important for all of you, please be very careful in selecting your financial advisor. You have to look at his qualification. You have to look at the experience, whether he has worked in a similar field, he has right kind of background, he has integrity or not. It's extremely important. Check the integrity. Look at the references, look at the testimony. If you know somebody, why don't you ask him? If you're selecting a financial advisor, ask him to give reference of his own client who can talk about him. Check his knowledge of debt market. There are many people who will tell you about the equity. In fact, equity is very difficult to tell, but there are very few people who have knowledge on other kind of asset classes like debt, forex, gold, commodity. So you have to look at comprehensive knowledge of financial planner, financial advisor. It's not all about the equity. It's also about the debt planning. It's also about the various kind of asset classes. Understanding is conceptual understanding, and all this. Please take time to select your financial advisor. This is one of the most important things you will do in your life. And be with him for a long time. Don't go and just keep on buying the product for somebody anyone who calls you a banker or emotionally blackmails you. But go through a financial advisor and buy product based on that, and to advise a financial advisor with the proper planning. Thank you so much, Ashish. You can take away from here.
Thank you for sharing about the latte factor, Abdesh, and many other insights that you provided. Give me a minute, friends, to share the screen with you. So while I'm setting up the screen, we'll be happy to hear your comments in the chat. What have been your takeaways from what Abdesh talked about goal-based investing and how to pick an investment advisor, how to get rich slow, but for sure.
So Ashish, we can also take some question. People are posting question in the chat. We can start answering that. Mr. Goyals has a question. He's saying on what basis I said 15%. We have taken 15% in the latte factor example. So, Goyal, this has been a conventional. If we take the history of BSE 30 index, which was 100 in 1979, or 1st of April 1971, BSE index was 100. So it was that's the time BSE section started, and currently it's close to 39,000 something. So if we take 15% compounding on 100, it's around at the rate of 15% we reach to at current level. So on a long-term basis, equity markets have provided that kind of return, and this is based only the index I'm talking about.
But of this, and Ashish, thanks for your nice one. But my point is that the past cannot be compared with the present and future. Now, during this pandemic and all these markets dynamics now, do you think that 15% example now can become 5% or 7% as a practical thing, right? Suppose as a customer of you, maybe like as an investment thing, if I keep in mind 15% and I get 7%, it will be very much demoralizing factor for me, right? So basically, I think 15% is on a very, very higher side, considering all this today's present scenario. So I think you must correct. I think if it is even 7% today's scenario, one must be happy actually.
No, I will not be happy with 7%. And I tell you, reason taking 15% on how you should calculate for the future. Both the things, I'll answer your question. Okay, so 15% has been taken in the past, which I agree with you. So it might look very high as of now, currently. And No, and last 4-5 year example, probably people have got 6-7% kind of return. So I really don't. I understand where you're coming from. But example which 15% is taken on long term basis, 30-40 years kind of example. Now, whether we should take 15% for future or not, now coming to that question, sir, see how we should look at the return. 15% past may not hold. I agree with your point of view that may not hold good for the future. But how do you look at the equity return? So we should always look at the returns from any asset class in terms of real return. I'll try and quickly explain this concept of real return. Real return is a return above inflation. So if in any economy inflation is down, then your return will also be down. Some economy which has in 2% inflation, you can't expect 15% kind of return there. There's 6-7% return, a very good return in that economy because you're getting 5% to 6% return above the inflation. So in our economy, when the inflation was higher, that 15% return used to come. Now inflation has come down to 4%. I don't know if it will continue in the future. I think it looks like that the inflation will remain benign for a very long time. In that case, you should look at a return which is around 6% above the inflation. So if inflation remains around 4-5%, you look at the equity return of 10-11%. That's going to be a reasonable way to look at it. And that's how we should look at it. So inflation goes up and return also has to go up. So I fully understand your point of view. Maybe 15%. I've taken past example, but even if we were trying to arrive at how to become a dollar millionaire. So even the concept of dollar millionaire will still remain because when inflation remains low, we will know our currency will also not depreciate against the dollar. It is a slightly complex economic concept. I need another session to actually explain this part. But I somewhat agree with you. It's not going to be 15% maybe, but we should look at early teens kind, 11-12% kind of.
Okay, thanks for that question, Goel Saab, and thanks for the comment, Gurpreet. Friends, we have posted a link to the feedback form. So, while you're thinking of your questions and comments, I'll also request you take out 30 seconds. This feedback form will take less than 30 seconds. Please go and fill this feedback form. And then, we will take...
We'll take more questions after this also.
Yeah, we will we'll resume. Yeah. We'll resume.
Some questions, Ashish, the questions are coming up actually.
Yeah, sure. So we'll take 30 minutes pause for you to fill out the 30 seconds pause to fill out the feedback form, and then we'll go to question and answers. Once you have filled the feedback form, please come back and update in the chat. FD, feedback done. Thanks, Navneet. So maybe Avdesh, while other people are filling up the feedback form, you can proceed with the next question.
Yeah, next question, Ashish. What is the next question actually? I need to see that. So, Goel Saab ka question tha, and then we have another question I saw. People had earlier also asked the question. I can request them to come up with their question. I think that will be better.
Thank you, Ruchi. Thank you, Ritu. Thank you, Manas. Thank you, Goel Saab.
So Gurmeet has a comment that he wants to advise his daughter who's turning 20 to start early. And I think Gurmeet, that's as a father, you will do the best thing for your daughter if you can advise her to start early. Whatever a small amount it is, but that's going to help her in future. There were certain questions which are coming in between. Can I request to post them once again, and now we can answer that. Goel Saab, another question. 5 lakh saving investment. Goel Saab, this again is a goal play of a goal here. Can advise only if we know what is the purpose of investing, and what's the duration we have. So there's something on individual basis we can do, we can discuss. But since I really don't know your goal, I can't advise you exactly.
So friends, while we are waiting for your comments and questions to come, uh, we have just shared the Facebook page of the Mindful Living community. You can like that, and once you like, then you will continue to get updates about our future events. So we are putting up we also have a YouTube channel. Please like and subscribe. There's a LinkedIn page. Please take a minute to stay connected. We have ample time. We have another 10 minutes to go. So please take some time. And once you have done, like the Facebook page, YouTube channel, LinkedIn, please come back and type. If you have liked the Facebook page, type FD, Facebook done. If you have liked the YouTube channel, please come back and write YTD, YouTube done. And if you have liked the LinkedIn channel, please come back and type LID. If you have done all three, you can type all three. And please do that, and then we will, Avdesh has also put up his link for his website. Please like that and stay in touch with Avdesh.
All the links of YouTube and LinkedIn and Facebook are available in the website, so you can go there and.
Thanks, Jayashree. Thanks, Manoj. And stay tuned. We have an exciting bonus offer coming up for you. So look for. Thanks, Jayashree, for liking the YouTube page and for the LinkedIn page. And also, please keep sharing with us your takeaways, and also use this time to put your actionables in place. In the worksheet, in the workbook, the last section has what are the learnings from the session today, and what is it that you've learned from Warren Buffett, who is worth $80 billion, and how will you use the learnings from today? What are the specific actionables? And here you have the YouTube channel of Moneylogist. Please like and subscribe for cutting edge information. Avdesh puts out very, very relevant 2 to 3 minute videos. So you can stay updated on matters relating to your personal finance there. So if you have any comments on the workbook, on the takeaways, questions, happy to hear. And while we are waiting for your comments, questions, and updates on your liking the channels, I would take this time to also update that next week we have a very exciting session on the occasion of Teachers' Day with Amrita Gupta. So that session, which is next Saturday, is 5th of September, and the session is scheduled at 12 noon. And the topic of discussion is pursuit of happiness. So once you like us on Facebook, YouTube, LinkedIn, you will continue to stay in touch with us and continue to get updates about our future sessions, that we are planning. We do sessions every week. So, you can participate and benefit from them. Thank you, Annie. So in case you want to become happier and learn from a teacher who has lived in India, Oman, Middle East, US, and is Art of Living teacher, she's going to talk about her journey to become happier. If you're excited about that, please type E, excited. Thank you, Jayashree. Good. Thank you, Ruchi. Thank you, Goelsam. Thank you, Manoj. So before you sign off, I'll announce the bonus offer, which is a free one-to-one consultation with Avdesh for about half an hour. Normally, his consultation would have been priceless, but for the fact that you have joined here in the session today, he's happy to offer his consultation on a complimentary basis. For 30 minutes, you can, in case you want to avail of the bonus offer, you can send a WhatsApp message either to him or to me with the words BO, bonus offer. And then we will connect with you and we will schedule a time for one-to-one personal financial consultation, where we will look at your complete finances holistically and help you generate either more returns out of the existing assets you have, or help you earn more money by cutting down on your debts, or by reducing the interest rates, help you negotiate better rate with your bankers. There are multiple ways in which you can increase your wealth, and that is what our endeavor is, to make your finances solid. So thank you, Uma. You can send a message to Avdesh or me on WhatsApp, and we will reach out and schedule a time with you. Your existing assets can be utilized more effectively to generate additional returns in a safe manner. And that is what Avdesh can help you with. So in case you want to have better returns, more financial security, peace of mind, please reach out to us. Another minute and then we will close. Avdesh, is there anything you would like to add?
No, Ashish, is there any question pending? Then we can answer that, or else we can log off now.
Okay, friends, thank you very much for taking out time and joining us. We are grateful to you. We really appreciate your taking out 1.5 hours on a weekend and joining us. Thank you, Avdesh. Thank you, participants.
Thank you. Thanks, everyone. Thank you, Ashish, for having me here. Thanks a lot.
Have a lovely weekend.
Thank you. Bye to everyone.